Hello everyone. Welcome to our today's webinar on equipping professionals, building skills for sustainability reporting and assurance in changing landscape, organized by Sustainability Reporting Standards Board, jointly with SAFA, South Asian Federation of Accountants. We have with us an chairperson of SRSB, CA Siripriya Kumarji, and CA Dr. Anuj Goyalji, Vice Chairman of Sustainability Reporting Standard Board. We have with us our eminent speakers of today, Mr. Sauranga Indranilji from Sri Lanka, Ms. Fauzia Safdar Khanji from Pakistan, CA Dr. Rashmi Annapurna ji from India. Now, we would like to welcome our today's event enabler, CA Ashish Gupta ji, Chairman, Seeker Branch of CIRC of ICI, to just start the webinar. Over to you, sir.
Thank you, ma'am. I'm introducing the profile of Ms. Fauzia Safdar Khan, FCA.
Sir, can you please unmute? I think you're on two devices.
I'm okay, ma'am?
Yeah. Yes.
Thank you. Ma'am, Ms. Fauzia Safdar Khan is a passionate, creative, and driven financial and sustainability professional.
Sir,
with over 10 years of...
Sorry to interrupt you. You have to give the introduction of our chairperson first.
Sorry, ma'am. Chairperson. CA Siripriya Kumar, Chairperson, SRSB. Ma'am, I'm sorry. May I the line?
I'll do it. Sir, all the audience, we would like to welcome our CA Siripriya Kumarji, Central Council Member and Chairperson of Sustainability Reporting Standards Board and Director of the Institute of Social Auditors of India. She is also served as the Vice Chairman of Corporate Laws and Corporate Governance Committee and the Professional Skills Enrichment Committee. Over the last few years, she has also served in various committees and boards of ICI and making a noteworthy contributions to the Corporate Laws Committee and Expert Advisory Committee and Financial Reporting Boards. She is a registered insolvency practitioner and leads to the corporate restructuring and insolvency practices. She was the part of the working group constituted by AMCA for drafting the rules and regulations for the bankruptcy and insolvency code. Additionally, she is a regular faculty member in the training programs of ICI and other accredited institutions, having delivered over 300 lectures. We would like to welcome you, ma'am. Ma'am, we would like to invite you for your welcome address, ma'am.
Thank you very, very much. To the chairperson of to the vice chairperson of the Sustainability Reporting Standards Board, CA Dr. Anuj Goyal, to Sri Sauranga Indranil from Sri Lanka, to Ms. Fauzia Safdar Khan from Pakistan, to Rashmi Ainapur, and to our event enablers from Seeker Branch. Here's a very, very hearty good afternoon to all of you. And on behalf of the Sustainability Reporting Standards Board of the Institute of Chartered Accountants of India, I take this opportunity to extend a very warm and a very hearty welcome to you to this webinar organized by SRSB. Thomas Friedman said it's a flat world, and I think the world has got even more flatter in the context of sustainability reporting, which is why we at the board decided that all the webinars that we do would be jointly with the SAFA countries for a start and progressively to the rest of the world in the future, in the near future actually. And it's in this context that we have this webinar that we're going to introduce today. So what are we going to speak about in this webinar? We'd have Sauranga from Sri Lanka, who's going to talk to us about the overall context of sustainability and some specific Sri Lankan perspectives. That would be followed by Fauzia, who'll speak about the Pakistan perspective, and followed by Rashmi, who talk about India perspectives. And all these will be centered around reporting, risk management, processes, data gathering, etc. And if you were to trace the history of governance in the world, I think we had this period where marketing heads used to run companies and all companies were first sales driven. And then SOX happened. And the entire debate and discourse shifted to corporate governance for fairly a long time. But today is the day and the decade of sustainability. Starting from very small enterprises to very large enterprises, we would have to embrace the sustainability dialogue. And this sustainability dialogue assumes even more significance in the context of countries pledging to achieve net zero emissions by whatever years. Different countries have different targets. Now, in terms of the overall landscape, all of us are actually professional accountants, and perhaps some of us are preparers like Surangaji, and some of us are assurers like the rest of us. Whatever it is, the overall landscape, what is the landscape? The landscape is the ISSB has issued the IFRS S1 and S2 standards, which are the standards for sustainability reporting. S2 specifically focuses on climate reporting. Now, in terms of frameworks for reporting, different countries have adopted different frameworks. India, for example, has a completely different framework. It's called the BRSR, which is about a set of 150 questions that the top 1,000 listed companies in the country are required or obliged to report under the SEBI, which is our Securities Exchange. Incrementally, the top 150 companies in India, the listed companies, are also required to get their BRSR core, which is basically a subset of BRSR assured. Different countries follow different frameworks, and in terms of the evolution of the frameworks themselves, we have Sri Lanka would be on, I think, TCFD, the GRI. There are multiple frameworks that countries adopt, and we have today, in fact, one of the challenges is the diversity of frameworks that are available for reporting, but S1 and S2 are largely from the TCFD framework. In my own perspective, I think, and what do these frameworks require? For example, in India, we talk about ESG, environment, a set of parameters, social, a set of parameters, governance, a set of parameters, ESG, and that's what the Indian reporting requires. Now, what we see as a big challenge in this whole business of transition to robust ESG reporting, including climate reporting, climate is one part of environment actually, is the role of MSMEs. Just like every other domain that's in the universe, the domain of professional accountants is also very, very complex. We have a bulk of the practitioners servicing MSMEs. And I, for one, believe that there is a huge opportunity for professional accountants to guide MSMEs in their path towards sustainability. Now, the disclosures which are prescribed under any framework, for example, I'll just give a short illustration. You have companies or entities which need to require to report their Scope 1, Scope 2, and Scope 3 emissions. Scope 1 emissions are emissions which are directly connected to the entity. Scope 2 emissions are those emissions that come from purchased electricity. So obviously, when you purchase a unit of electricity, there's a certain carbon emission that happens. That's the Scope 2 emission. And Scope 3 emissions are possibly the most complex. They are emissions that occur from the value chain of an entity. What is the value chain? It's both the upstream and the downstream. What does that mean? Emissions that cost by my suppliers as an entity and emissions that are caused by customers and the downstream. And what's very interesting is that a bulk of this value chain will comprise of MSMEs. In India, there are about 6.5 crore MSMEs who account for 30% of the GDP of the country, and about 1.5 crores are already registered in the Dharpan portal. And this is both a risk and an opportunity for the MSME to actually embrace sustainability reporting, because they will be competing with other MSMEs in the context of their ability to supply to a larger entity. See, a larger entity would obviously want to pick an MSME who's reporting and who's aware of their ESG norms that they need to comply with. So it's in that context that ESG becomes very, very important in an MSME space. And that's exactly in addition to the policy initiatives of the board for the next 2 years. And this year I can certainly speak because I'm the chairman, and the vice chairman, Dr. Anuj Goyal, is also very passionate about MSME's ESG journeys, both as preparers and for the rest of the fraternity as assurers. There's a very interesting paper, which I've, again, I think spoken about in an earlier webinar as well. It's by UNDP, and it's a paper that's called Project Savannah, that speaks about three pillars that are very crucial in this MSME journey. The first one is about what to report. The second is about how do we enable digital platforms for reporting. And the third is how do we educate MSMEs on their opportunities that are available, whether it's in terms of opportunity to be able to do more business or the risk. The counter side is the risk of inability to not be able to do business, and the opportunity for climate finance, which I think is, again, a very, very big field. And maybe very shortly, we'll have the next after webinar series on climate finance. Now, at the end of everything, somebody would like to know, why should I actually participate in this webinar? I think that's the core context, right? Everybody wants to understand what's in it for me. And today, I think this seminar will be important because for a preparer, you may have linkages to suppliers or customers or even associates, joint ventures in these geographies that we speak about. For assurers, I think it's important to understand where the rest of the world is moving. And I think in that context, this webinar would help both a preparer and an assurer. And the other important thing is, I think this entire subject of climate change is so vast. In fact, my team can speak. We're trying to respond to a few consultation papers, and no time seems enough time. And the best way to pick up elements of this information very quickly would be these webinars, and hence these webinars. And for the benefit of those of your colleagues who are not able to attend these webinars, kindly note that the recorded versions will be available on the channel that of ICI TV, the channel that specifically reads SRSB, the Sustainability Reporting Standards Board. With this introduction, I hope I've set a relevant context. And thanks once again to Vishalji and the others from the Sikha branch. You may also ask us, why do we have these event enablers? So Dr. Anujji and I are chair and vice chair, intermingled in two committees, the Professional Skills Enrichment Committee, as well as the Sustainability Reporting Standards Board. And we categorically agreed that whatever we do must begin with our branches. Our branches, which are 170 plus all over India, are the bedrock of our existence, and they are the closest point of contact to the chartered accountants whom we really want to serve. We are 4,08,000 chartered accountants in India, and we are spread across so many geographies within the country. And so the role of event enablers, and like everything else, charity must begin at home, and all our efforts must begin with the branches. So thank you once again to each one of you who's participating in this webinar, and a special thanks to our speakers of the day who've taken the time off to be here today. So, and I must also place on record, I'm sure there's a formal vote of thanks by the secretary, but I must thank the secretary, CS Shweta Goyal, who's also assisted by Dr. Chindu Chandran and CA Manish, who sort of do a lot of effort in enabling the various diverse initiatives of the committee possible. We do webinars, we do certificate courses, we do programs across all our 170 branches, and then we respond to technical papers and we write our own content. So thank you very, very much, Shweta, for this phenomenal effort. Thank you.
Thanks a lot, ma'am. Thank you. Thank you for setting the context also. And I think we get to know more about reporting and this carbon emission scope 2 and the context of the MSME and other things. Thank you, ma'am. Thanks a lot. Now we would like to welcome CA Arun Bhaskar ji, SICASA Chairman of Seeker Branch, to introduce our Vice Chairman, sir. Over to you, Arun ji.
Thank you so much, ma'am.
Sir?
जी मैम.
Okay. Sir?
अनुज गोयल
We
sir
would like... Sir, I think you have to go on mute, sir. Please. We would like to welcome our Vice Chairperson of Sustainability Reporting Standard Board, CA Dr. Anuj Goyal ji. He is a Central Council member and Vice Chairman of the Sustainability Reporting Standard Board. He also serves as the Chairman of the Ethical Standard Board and the Professional Skill Enrichment Committee and the Publication and CDS Directorate. He has also served as the Chairman of the Ghaziabad chapter of ICSI and ICMA with an extraordinary tenure of 17 years in the Central Council, 3 years in the regional and 6 years in the branches, including chairman of the CIRC and various central committees of ICI, member of the Ethical Board and more. He has made significant contributions to the profession. With a vast experience exceeding 30 years and a wealth of knowledge, his contribution in the field of research and development have always been remarkable. He is a well-known speaker on various topics and also served as a visiting faculty member at various institutions. Additionally, he has worked as an editor-in-chief and editor of various publications of professional interest. We would be happy to welcome you, sir. We are honored to have you here. Over to you, Anuj sir, for your keynote address. Anuj sir. Anuj sir, we would like to welcome you.
I think he has a device issue.
Yes, ma'am.
Sure. Would you like to introduce the other speakers as well?
Yes, sir. Yes, ma'am. Ashish sir, we would now request you to introduce our first speaker. Sauranga
Okay.
sir. Yeah. Over to you, Ashish sir.
I'm introducing Mr. Suranga Indun sir. Mr. Nilja is the group head risk and control and chief
Mute
risk.
your other device. Can you please mute your other device?
Mr. Indunil is the group head risk and control and chief risk officer of Rating Group.
Sorry, Mr. Ashish, your voice is very muffled.
Yeah, sir.
Hello. Ma'am, I'm audible, ma'am.
Yes, now you are audible.
Okay, ma'am. Thank you. I'm repeat again. Mr. Indunil is the group head risk and control and chief risk officer of Brandix Group. He plays a key role in driving enterprise-wide risk management, ESG, internal control of group with over 15 years of managerial level experience in governance, risk and control. Being a fellow member of CA, Sri Lanka and SCCA, he has also been a senior lecturer in corporate governance, risk management and advanced audit and assurance, and counts 20 years of continuous lecturing experience for chartered accountancy and SCCA. He is a certified internal auditor from US and a certified risk management assurer. Thank you.
Thank you, sir.
The Vice Chairperson to please speak a few words before we hand over to Surangaji.
Thank you, Sripriya ma'am, our honorable chairperson, very, very dynamic chairperson of the Sustainability Reporting Standard Board, our star Central Council member from the southern part of the country, the capital city of Tamil Nadu. Others can be on mute. Sweta ji, you can manage. You are happy.
Yes, sir.
You know, at your end you can also. I'm really very happy that under the leadership of Sripriya ma'am, we are trying to put our 100% to see that how we can make this universe, this earth, a better place to live. And I'm really very happy that we are having the South Asian Federation of Accountants helping us in this endeavor in a great way. And who are in India, they can very well understand that how now the global warming is taking place and in each and every part of world, I think, including India, including Sri Lanka, and including Pakistan, we must be feeling that the effect of the global warming in this summer. We are having the presence of our very, very prominent resource persons we are having CA Dr. Rasmi Anapur from India. I welcome Rasmi ma'am. We are having the presence of Suranga Indunil ji, who is the Group Head Risk and Control and Chief Risk Officer, Bandix Group, Sri Lanka. And of course, we are having invisible Fauziya Safdar Khan, Director Sustainability Consulting, Kro Hussain Chaudhary and Company from Pakistan. And of course, we are having the event enablers, very, very prominent leaders of the profession from India, the chairperson of Seeker branch, in which we do have Khatu Syamji and Salasar Balaji. And Sripriya ma'am is very keen to be at Seeker at the earliest, and we'll have the visit of both the places. So Chairman C. Ashish Gupta ji and my brother, very, very prominent leader of the profession of the Seeker branch, Sikasa Chairman Arun Bhaskar ji. And of course, we are having C. Sweta Goyal ji, our Honorable Secretary of the SRSB from India. We are having Chindu ma'am, and of course, we are having Mr. Goyal from the SRSB team, Manish Goyal. And all the delegates from each and every part of country, SAFA countries, and from each and every part of the world. Very, very good afternoon, friends. I'm really very happy that under the leadership of Sripriya ma'am, India is trying its level best to see that how we can really do something very, very concrete. Not only for the profession, for the accountancy profession, but with the help and support of the accountancy profession, our members, how we can really do something very, very concrete for this universe. And Sripriya ma'am is the director of the Institute of Social Auditors also. So I think it is our social responsibility to really take care of our mother nature in the best possible manner. So I'm quite confident when we are having the leaders like Sripriya ma'am, and we are having the resource persons, the experts like Suranga ji, Fauziya ma'am, and Rasmi ji, and the very, very dedicated and devoted team of SRSB India, led by Sweta Goyal ji. I think we will be certainly will be in a position to make this universe a better place to live for our future generations to come. And of course, I would like to express our sincere gratitude for joining us today. And I am very well aware that it's very difficult nowadays in South Asian countries. It's a very, very hot summer, and all of us are here to join to really do something as an expert in SRSB. And I'm quite confident that our delegates, our members will certainly try to see that how they can use their expertise for this very, very important responsibilities which they are having on their soldiers. And friends, the increasing focus on environmental and social responsibility demands new skill sets from professors, particularly accounting professors. Mastering sustainability reporting and assurance will empower you to navigate this evolving landscape and contribute to a more sustainable future. We are really honored to have the best of the resource persons, and I'm quite confident when we are having the best of the resource persons with us today, we will be certainly, our speakers' insightful presentations will provide a valuable perspective on the evolving landscape of sustainability reporting and assurance. A big thank goes out to all the participants for joining us today. And the active participation of all of you is what makes the platform really, truly engaging. As we are moving forward with the webinar, we look forward to a day filled with insightful discussions and learning opportunities. I'm really grateful, really indebted to Sripriya ma'am for being very, very active, and South Asian Federation of Accountants for being very, very active to really do something very, very concrete with the help and support of the accounting professionals to make this earth a better place to live for our future generations. Thank you very much.
Thank you, sir. We are really honored to have Siddhipriya ma'am and Anuj sir as a leader of the Sustainability Reporting Standards Board and truly passionate to work under your guidance. Thank you, sir and ma'am. Now, we would like to welcome our first speaker of the day. So, Ranga sir, over to you, sir. Thank you. We would like to welcome you. Thank you, sir.
Thank you very much. Hope I'm
Over to you,
yes,
sir.
you can hear me properly, right? Right.
Yes.
Right. Thank you very much, Chairperson. I think very insightful introduction. You have given the full context.
Your voice is breaking a little bit, Surangaji. So
Okay.
could you be a
how
little
about-
louder as well? Yeah,
Yeah.
louder.
How about now? Are you able to hear me?
Yes, a
Right.
little louder as well. Yeah.
Okay, sure. So thank you very much, Chairperson, for setting context for the session, and also the Vice Chair. So I think in Chairman's address, she explained the importance of sustainability standards and set some context, and even she spoke about scope 1, 3, etc. So my part during the next half an hour, please let me know if I'm if my I hope now I'm loud and clear, right?
Yes, sir.
Yeah, we
Right.
seem to have a small voice break though. Just take care about that.
Okay, sure. So let me share my screen. Are you able to see my screen now?
Yes, please.
Right. So it's very challenging. I have a lot of as a chartered accountant and basically what I thought is of
Surangaji, I'm having a voice break from your side. I don't know if it's a problem with me. So you may want to go off the video.
yeah,
if it
sure.
will be your bandwidth.
How about now? Are you able to hear me?
Yes, much better.
Yeah, okay. Right. So what I mentioned was this half an hour I'm going to basically I'm about discussing recent development in corporate governance in relation to sustainability. And secondly, to talk about navigate the reporting landscape, and then essentially to look at, I mean, from a risk practitioner's perspective.
I'm sorry, Suranga. I mean, we're having a voice break. Can Shweta tell me whether it's my problem or any other?
How about
Ma'am,
others?
it's clear. Ma'am, it's clear.
It's
Yes, ma'am.
no, because I'm able to hear you clearly, but not Mr. Suranga.
Yeah,
Ma'am,
how
the voice
about
is
others?
clear from our side.
Yeah, others can hear me, right? There is. Can we ask from someone else from the participants? Sorry, the other members of the panel, are you able to hear me properly?
Yeah, now it's clear. Now it's clear.
Now it's
You can-
clear. Yes.
Now it's clear. Before it was cracking.
Now it's okay, right?
Now it's okay.
Okay, thanks. Sir. So basically, I'll straight away start because every report needs valuable time of the participants. So let me get into the subject straight away. To give a context to my session, I would like to talk about why sustainability matters. So this is the move from sustainability to ESG. So the first time we hear sustainable development was this landmark study, Brundtland report of 1987, where it talks about sustainable development. That it's about we can meet our needs today, but without compromising future generations' ability to meet their needs. So leave the planet for the future was the key message. From that date onwards, there are many developments. Wind ports and developments. I don't have time to navigate that historical development, but bigger point to make is big problem that we are facing now, ecological overshoot. Meaning, as human beings, unfortunately, we are consuming the natural resources faster than the nature can regenerate. You can see how population grow, and we will continue to face this problem not having resources. And on the other hand, the climate change risk, which I will talk in numbers in a little while. Before that, I would also like, interestingly see this famous so-called one of the gurus in sustainability who spoke about triple bottom line right into Harvard. 2018, he says 25 years ago, he introduced this concept of triple bottom line. It's very interesting to see now what he says, what he talks about. Now, what he says when it comes to CEOs and CFOs, they are very aggressive about numbers, financial numbers, and he says they can even move heaven and earth to ensure they hit the profit target, right? But that is not the case for other areas like people and planet. Unfortunately, triple bottom line has failed to bury the single bottom line. So that was the concern. So my question to the audience, still, are we talking about the single bottom line or triple bottom line? What are the regulatory developments? What are the financial reporting development that propel organizations to aggressively look at beyond the single bottom line? So that is the idea. That's where the ESG came as a big hot topic in board. Now, according to TCFD, this is an older study. If you do this calculation now, it could be much bigger amount. See the value at risk if you quantify financially because of climate change. It can range from 4.2 trillion to 43 trillion at the end of the century. So I'll speak as we go along how this risk could affect the organization. And on the other hand, when it comes to board responsibility for reliable sustainability reporting, now we hear greenwashing. Now, if you look at it, you will wonder there are more than 1,500 cases in 38 countries for greenwashing, right? And companies not being able to meet their targets. And look at one particular example here in 21, the court challenging the Royal Dutch to reduce their net carbon emission by 45% compared to the original level of planning. So all this publicly available information, right, suggests, and research findings suggest that, what is going on. And more importantly, if you look at the last point in this slide, that now the board of directors are under pressure, under fire, and they can be changed. I would ask, who is more powerful to change the board? That's the change that we are talking now. I'll talk with numbers in a few minutes. So from a risk perspective, the ESG risk, we talk about, if you look at the whole S1 standard, the central focus is on one big thing. That's about sustainability related financial disclosure. It's a marriage between non-financial and financial, but the standard talks about financial disclosures. So what does it mean? Which means how you marry numbers with the ESG risk or sustainability related risk and opportunities. Now you can look at on the screen, all these are cases when it comes to ESG risk management. That can have a bigger impact, not only on the financial, but on the reputation of the companies, right? So I don't need to talk about the cases. As you see, you know what it talks about, right? So that's why as a risk practitioner, this is so interesting. When I first read IFRS S1 and S2, it really governance, strategy, risk targets, wow, how we connect. I'm also talking as a practitioner in an organization as well as a lecturer. It's so interesting that how these new developments have come about, but the challenges even in Sri Lanka now, companies are wondering governance. What is the G in ESG? Have you ever asked that question? If you really deep dive the G part of ESG, the S1 has 6 points for the board, 6 hows for the board. Standards start with the word how. How board is going to acquire the knowledge about ESG. How board is going to check whether these targets are set and monitored. How these risks are integrated. Now, this how question is a part of the board. That is a governance piece of S1. And the risk management part. That's why in S1 core requirements, you have governance as number 1. Strategy. What's your risk management strategy? Third one, what's your risk management process? And then what targets you are setting to address these points. So I'll speak about this one in one slide as we go on in this presentation. And that's the risk perspective at a glance. Now, this is a very interesting thing that I came across in my research, right? The model that UNE has called integrated governance, and many corporate governance code in the world now. If you look at 23, the changes to OECD guideline internationally. Even in Sri Lanka, corporate governance code was just very recently revised. And if you look at UK, recent governance code published in 2024, right? This year brings this element of going beyond the single bottom line, going beyond the shareholder privacy, shareholders' interest to the stakeholder capitalism. Look at the triple bottom line again. That's the message. And there is a force behind that. I'll show you what is that force in a little while. So before I go there, I just want to ask this question from the audience. Now, traditional corporate governance, we talks about independence of the board members. I would say that is traditional. Now, according to this study, they talk about the real board independence is not just independence by having shares or relationship or connection. It is to have the knowledge and diversity that is required to drive this sustainability agenda, right? So that is what is required, and accordingly, whether board remuneration is aligned to the ESG targets, not just the numbers. So there are 3 levels in this study they talk about. Now, this particular one, what I spoke is usually we look at beyond the independence really at a board, individual board members, do they have the expertise? The S1 talks about this more specifically, right? And the board to have the time, the ethics, because ethics is a big topic when it comes to S1, because any company wants to look at beyond the profitability. That means the ethical aspect naturally counts. Many research being done, how ethical leadership connects to sustainable development. And similarly, when you look at board as a whole, how the size of the board, the diversity drives the sustainability agenda. And then whether it is aligned, the ESG targets like carbon emission reduction, SBTI, those connected to the board remuneration in terms of maybe variable bonuses, whatever. Those are there, then that is good. So anyway, in this framework, they talk about 3 things. There are companies, sustainability is outside board agenda, by the way topic, right? You know, when auditors comes and for the disclosure purpose, there is something, but it's not the usual board agenda. There are other companies, if you want to develop, there is a disconnectivity. Maybe it's good for disclosure, but there's nothing real. But there are also other companies, they actually want to have a governance structure for sustainability. Deliberately, they want to have agenda item to discuss it. There is a sustainability committee, but pastry is not that. Don't divorce sustainability with the business. Integrate instead. And that is the integrated governance model. That is phase 3. So the phase 3, actually phase 2 is about sustainability strategy. We got a sustainability strategy. That means there is something on our sustainability. We will do ABC project, but it's not really integrated to the business model and value proposition of the company. They are not seeing that sustainable products. If you look at my industry, look at, do you know how many liters of waters it takes to produce a denim? The chemical usage, all of that. Now, we can come up with an innovative product as an industry to say, look here, this product is environmentally friendly and made from recyclable material and made ethically through ethical labels. So therefore, it commands a premium price, and that is called sustainable strategy. Not to have a sustainability strategy, but to have a sustainable strategy, and that is integrated governance. There is no board committee separately. Every board member is interested in sustainability, and it is integrated to the KPIs and everything. So this is an interesting development. And now integrated governance is a big topic. And there are other areas. Now we speak about assurance. Other speakers will speak about assurance from external auditor. But my question to you, external auditor may come and spend few months, few weeks, right? But what is the holistic assurance within the company that you can give to say that, look here, what we are reporting is really coming from a robust internal control system, When I say that traditionally we speak about COSO framework, internal control for financial reporting. Now with S1 and S2, we speak about internal control over non-financial reporting. What is the system to check the usage of diesel, fuel, usage of, now from where this comes? Is there a manual Excel sheet? See, many or location, how do you capture this data? Use of digital tool, etc. So what are the controls of it? Greenwashing is a big issue, therefore reliability of sustainability matters. So all of that, what I'm talking from risk language, that is why the standard closely connects to risk. Now I spoke earlier that somebody is driving this agenda. It's interesting to see who is that. So that is owners. But this ownership has significantly changed from history to now. You will wonder by looking at this entire world, how many companies you see out of 44,000. This is the latest study, 23 OECD. Unfortunately, it refers to, because this is a global study, right? 22 data out of 44,000 listed companies. Of that 98 trillion capitalization, the owners are not individual shareholders, but they are institutional shareholders who are pushing this agenda, right? So they are really behind the board, who are not sensitive to this sustainability related ESG topics. So they can change the board. So they are the one driving this agenda. So more specifically, I'll give you a case here. Example, see this company, right, ExxonMobil. So they actually, the ESG, the board was changed to appoint ESG minded directors, right? So one of the big change, why this ownership is changing according to the OECD, three big change, especially in Asian countries, as we speak, the Sri Lanka, India, and other Asian countries, there is a significant size coming from that rise of institutional investors, and they are changing the agenda. And now I will show you 24 this year study. How many companies out of this 44,000 really disclose this, right? So about 43 odd companies, right? Out of this, 9,000 companies. That 9,000 represent 85 billion out of this 98 trillion, right? So they disclose this information, sustainability, risk and opportunities, right? And especially our chairperson spoke about scope 1, is very hot topic for the S1 and particularly, right? 6,000 odd companies report their scope 1 and 2 emission, right? That's about 43%. You can see the countries. And then more specifically, this environmentally sensitive industry, bigger part of this, right? The processing and mining, that doesn't mean for other companies it's not relevant. So that is a bit of an intro to say that this integrated governance is coming in a big way. Institutional shareholders and then corporate governance codes around the world have changed, right? In our country and many other countries. I know I mentioned some. Now that is the context. Now we are talking about this ESG reporting landscape. So next 5 to 10 minutes, I'll quickly run through before I come to some practical aspects, this perspective. Now all of these standards for the audience knowledge, right? So these standards have been there, you know, some of the prominent standards of what is behind S1. If you really look at S1, always recommends SRSB, right? This entity shall use, the word shall. But if you look at some other framework, the standard says entity may use. SASB standards are really risk assessment, and it has 77 industries. Even for any industries, you can do the search in identifying material topics. And then integrated reporting, again, the beauty is that now even they have mapped S1 and S2 integrated reporting after value reporting. Now you can see here value reporting information. Now this very clearly, if I ask this question now out of this framework, which framework to use? These frameworks complement each other. So you can really use the integrated reporting framework to explain the engine of money making in your organization, not just to drive financial line, but the fixed capital. And that you can relate to S1 and S2. That mapping document has been done and published, right? That's where you can really use this reporting tool. And then I specifically touch TCFD, because S1 and S2 standards are primarily based on TCFD architecture. And even now, if any entity wants to do risk reporting, because see, climate risk, how do we really report? How do we do the climate related scenario planning? So there are a lot of material available to do this practically. So TCFD is a very powerful framework. And then we have ESRS. There is a significant difference again with IFRS and ESRS, the double materiality concept. But again, the good news is that there is interoperability among these frameworks. I'm sure my other speakers will touch this point. So I am very interested now. If you listen to my talk carefully, I mentioned previously that this governance, now this is where the G of ESG comes. The governance, I said in S1, there are 6 points for governing body. And the strategy is about your risk management strategy. And this is your risk management process. And what are your scope 1, 2, 3, and other targets that are available. So these frameworks have been around. And now S1, that is my main point of discussion. And I already mentioned it talks about one big thing. You can see I'm putting numbers. 1, disclosure of sustainability related financial information. What does it mean? It means one big thing, and that is SRRO. How do you practically identify SRRO? That's my main topic here, right? Because there's a limited time, I'm rushing, but I'm going to give of my presentation is about a lot of practical tools that can be used from a risk perspective, how to do this. I mean, anybody can disclose, but if you don't have the organizational process to practically do it, then there is no point. Now, see, I'm showing to you 24 global risk report. The biggest, the most impactful risk is the extreme weather. And then, according to OECD study 24, 70% of companies' market capitalization, those companies, they have set targets, right? But unfortunately, they talk about, if you look at these disclosures, sometimes the base year is not identifiable. That raises some doubt. Right now, this is extreme weather is #1 risk according to risk. So now S1 in one slide, right? And if I drill to these elements of governance that I speak about earlier, the 6 points. Now, is there a TOR very clearly articulating the board role, the skill, how they integrate SRRO, how do they monitor? It's not only governance role, the management role, but practically when you want to implement this framework, what are the tools available? So I want to borrow one of the prominent framework. If you Google and check this, many companies' annual report, you can see they refer to 3 lines. It's not 3 lines defense model anymore. It was changed as 3-line model. A powerful framework to really practically tell in your company, look here, this is the board of directors' role as the governing body. The first line, for example, the engineer checking the emission data and ensuring that, you know, the environmental control in a factory. Say I'm talking, we have many manufacturing locations in different countries. So engineer is a key person at the first line. And the second line, say, for example, the governing, say, head of engineering in the corporate, look at multiple data points and making sure that this is properly being controlled. And finally, and even the reports, finally, internal audit, independent internal audit becomes a very powerful third line to ensure what is being reported are reliable and those controls are there. And that is where the role of internal assurance comes beyond the external audit. And obviously, if you read any auditing standard, and even the new standards to come, the external auditor usually rely on internal control and internal assurance. That's where internal auditor play a much, much bigger role. Unfortunately, it's not spoken much, but as a global professional internal auditing has published, even risk professional standards, many publications. For example, COSO talks about how do you build internal control behind non-financial? It's very difficult because the boundaries are different. Data are qualitative, right? And some are futuristic. So then if you look at some of these data points to biodiversity, to emissions, to landfill, how do you capture this data, right? There are no systems, immature systems, multiple frameworks, and you have to rely on third party to get scope 2 and 3. It's really difficult. And that is why I want you to make a particular note. I'm introducing in my session, and even I have done a small research on this in Sri Lankan context, right? Combined assurance, one of the very powerful, first time the combined assurance was introduced in South Africa. recognized to be one of the best framework for corporate governance, which talks about King Code, King 4, the latest being, talk about integrated governance. They introduced this concept of combined assurance. Now, for sustainability, how many parties? CFO can't simply do this. There is a CFO, there is an environmental officer, health and safety officer, compliance officer, multiple parties. But how do you give one holistic view that the risks are being managed? I'm just showing you a case study. Now we have multiple plants. We create a platform. Each plant, there are owners. For example, engineer is the owner for environmental risk. HR manager is the owner for social risk, for ethical issues, etc. And then the information that is being captured through digital data is reviewed by the general manager of the factory operational manager. And then at a regional level, it is being captured and monitored by the CWO. And then finally, you can see the second line at a group level, this information being discussed. That's the second line of defense. And the third line of defense is where the internal audit can really navigate from a governance audit committee perspective, right, or risk committee perspective, how these issues have been addressed, right? I think I have about 5 minutes, right? So I will borrow maybe additional 2-3 minutes. So this is a very, very important thing. Not only I earlier spoke in theory the combined assurance concept, and this is how practically this whole idea of combined assurance is about control self-assessment. So you can leverage on multiple assurance providers within the organization, and internal auditor being independent function can be the third line and give assurance to both audit committee and risk committee. So the other aspect that it's one standard. If you look at the governance I covered, giving a tool for you to really understand. Then the risk management, if you look at this, one talks about what are the sustainability related risk and opportunities and what is company strategy to manage. So therefore, for example, in your organization, how do you really identify sustainability risk and opportunities? Do you really use whether board has set a risk appetite about it? So this is where you can really leverage on COSO framework for risk management purpose. We can do one full session on that. So basically COSO framework, recently, I think something happened to my presentation. Went to the suddenly, yeah, I was here. Now, if you look at what I'm showing on the top is governance I covered now, right? Yeah, so governance part I covered. The risk management aspect, if you look at even in Sri Lankan company, if you look at one of the bigger challenge organization may face, how to marry the enterprise risk management with SRRO. You can't just do in two departments. The first question to ask as a board of directors, right, whether there is a risk appetite for ESG related risk. So risk appetite is amount of risk you are willing to take. Imagine if there is you can now Google the cases of greenwashing. If companies say reputational risk, very low risk appetite, and make sure there's a robust system, that is the starting point. And then how do you incorporate risk management, risk identification, especially from climate risk angle? So in my last 5 minutes, last few minutes, I will use to show, I'll take maximum another 5 minutes, giving time to other speakers. Practically speaking, now one of the real hot topic now, how to do this climate related risk resilience, because one and two both talks about scenario planning. What scenario are you going to use? Is it 1.5 scenario, 2 scenario, and then what is the financial impact? How do you practically do that? How do you manage climate related risk? So that is very, very important thing. So one thing I told you, the marriage between now ERM department, if there is, should talk to the maybe sustainability and really need to figure out how we incorporate sustainability risk and opportunity. What is the process of identifying risk? So that even S1 guides that, even GRI framework guides how to do the materiality assessment. So that is your starting point. And then I told last few minutes, I will take few minutes to show you specifically major topic that is about this topic, right? The best practices in climate-related risk assessment. Now, there are a lot of publicly available, valuable tools. For example, if you look at this, there are various scenarios which is given here. And everybody talks about 1.5, the temperature going above, according to Paris Agreement, 1.5. But it's very, very difficult to achieve this target now. And say now, according to this map, we have say multiple operation in different countries. You will see based on this, the target, number of days, the hot is going to be very hot. How it is going to affect my operation, the productivity, energy cost. Now, these are the discussions, the brainstorming that need to have before you just disclose climate-related risk in the annual report as per S2. So the question to ask is there a brainstorming from this scenario and how those scenarios are going to be connected to your business model, right? So then what can we do about climate change risk? One is adaptation, big point. We can't do anything because that is changing. No, how do we do as one company? If company is thinking like that, that's not the good thing to do. But what is if your plant is going to be shut down, do you have a BCP, right? When this risk materializes, what is your readiness, the resilience? So adaptation is a big mitigation. The other one is, if you are socially responsible, the mitigation is how are you going to reduce the emission? Your SBTi targets, monitoring, and that's what is critical. So adaptation and mitigations are going to be two. And there are various ways how you really assess the climate risk by looking at, like I spoke earlier, what are the top risks, how do you mitigate those risks? And use this scenario. There are 5 scenarios given in IPCC. You can really use that as a starting point and look at in your country, your location, how these risks are going to affect. So I think to respect in the time, half an hour, I conclude this and allowing some time if there are questions. Any questions from the audience?
Thank you very much, sir, for your valuable presentation on the topic. Now, I would request CA Ashish Gupta ji to introduce our second speaker of the webinar, Ms. Fozia Safdar Khan ji. Over to you, sir. Ashish ji.
Sir. Hello.
Yes, kindly introduce our second speaker of the webinar.
Miss Fozia Safdar Khan.
Yes, yes.
Fozia Safdar Khan, welcome, ma'am. Miss Fozia Safdar Khan is a passionate, creative, and driven financial sustainability professional with over 10 years of experience. She firmly believes that the current business environment highlights the necessity of finding new avenues to learn and grow. She is currently serving as Director Sustainability Consultant at Crow, Pakistan. She has also made it a point to stay updated with the latest trends in the accounting and finance profession and the evolution of the professional role in the 21st century. As professional lives accelerate faster than one can keep pace, lifelong learning with the crucial in the 21st century. Welcome, ma'am.
Hi, good afternoon and good morning, wherever everybody is. Thank you very much for inviting me and representing Pakistan at such a big platform. Just to check, I am audible and visible, right? Anybody who can respond to?
Yes, ma'am, you're audible.
Okay, so I'm also going to share one very tiny presentation, and I hope that actually our first speaker has given such a detailed prospect of what sustainability report is, how we have to work in it. So that's already a great session and a big learning session for all of us. Before moving forward, I would like to speak a little bit about that. Why chartered accountants? Why CA professionals with sustainability reporting? So definitely, sustainability reporting, environmental reporting, social reporting was always there. It's not a new concept, but there was a problem. What is the value of the enterprise? What is the real value of the enterprise? There where the problem come and investors start asking that we want to know your real value. Is there any problem in your supply chain? Are you facing any environmental related risk? Are you facing any kind of social risk? People or community where you are working, they are happy enough to support your production, support your businesses. So overall, it's the risk management. Before sustainability reporting, we were focusing mostly on the financial risk management. And now the investor really want to know that how we are managing the risk regarding people, environment, society, and overall, nothing is possible if you don't have a good governance. So sustainability reporting is, again, I will say it's not new. It's the same thing how we were doing the financial reporting. We were categorizing what our risk areas are, and then management have to come up with a solution that how we have to manage these risks. And when you're managing the risk, definitely there are provisions, there are some kind of adaptation or mitigation processes. There are always solutions for which you have to get prepared. And for that, you have to incorporate into your sustainability or integrated reporting, and the investor can see your real value. What is the real value of the enterprise? So it's a journey from philanthropy attitude or feeling to a real value of the organization. Is your organization really sustainable? It is going concern from all the aspects. And is your organization or the business is making your environment also sustainable? Your people are also comfortable with that, how you are doing the business. So before I will talk about governance, sustainability report and stuff, let's see what we are doing in Pakistan. I will give you a very quick look. We all, I am sure, know about Paris Agreement. So Pakistan, among many other countries, it's I think almost 98 or 95 countries who were the signatories of Paris Agreement. Pakistan was one of that. So after getting signatory of Paris Agreement, the first NDC, that is nationally determined contributions, it's done in 2016. When Pakistan has done a lot of pledges that we will do what environment, what we will do with the people, what we will do adaptation, how we will move from emission, more emissions to less emission, a lower economy, lower carbon economy. So that is the nutshell, like what we all are looking for, that how we can become a low emission economy or low carbon economy. So after 2016, Pakistan did a revised NDC in which it comes to more practical, I would say, pledges that they are going to restrict their emissions by 50% by 2030. And they are saying that we will do this with the combination of the finances from their internal resources in Pakistan and from international finances. In their latest NDC, they banned the coal import. We are saying that we will do more projects which will be environmental friendly. We will move towards agriculture, forestry to become more adaptable, adaptation of the environment and resilient to the climate change. And definitely there needs the international cooperation for all these things. Any country cannot do anything good if the regulators are not working on that. So in Pakistan, we have three big regulators: State Bank of Pakistan, SACP, Securities Exchange Commission of Pakistan, and Pakistan Stock Exchange. Good thing that they all are working for so many years now. And today we are sitting at a place where we can say that our major listed company or giant business organizations, they are already doing the sustainability reporting. When I work with the clients and the industry, I see major export industry, they are at advanced level of the sustainability reporting. So what is the driving force? Like now it become more at regulators' plate. But what is the driving force for the businesses and industry to do the sustainability report? It was actually the customer. It was actually the consumer driven. So whenever I have a meeting with the industry, there's always they always say that we are asked to do that. But the positive thing of these pressures that Pakistan business industry and especially the exporters, they are already at a good level or mature level of sustainability reporting. They are definitely following different sustainability reporting frameworks. Mostly adopted framework is GRI in Pakistan, but there are many organizations who are doing their reporting on UN SDGs. Some are doing on TCFD or SASB. So these are the global frameworks which are practically adopted and I would not say adopted, practiced in Pakistan, because still in Pakistan the sustainability reporting is voluntarily. It's not mandatory still. So if the sustainability reporting is not mandatory, definitely the assurance is not mandatory. But good thing that now the regulators are working, so it become mandatory because it's the pledge of the country. So it's a country level pledge for which the whole business has to work. A few initiatives which I want to share with all of you is as Pakistan Stock Exchange Commission, they have worked. We have made a task force under Pakistan Stock Exchange who are working aggressively on different initiatives in which we have done lots of stakeholder engagement and very recent initiative that is London Stock Exchange Group, in which with which we did a collaboration. Through that collaboration, we will be bringing industry data, business data at the global level. So when you are at a global site where your data is available and that data is you can even check for the accuracy and completeness, definitely at country level your ESG indexation is getting improved, your rating is getting improved, and you can attract more capital, international capital towards you. Pakistan has already done joined in 2021 SSE. We are all know that SSE is a platform where they are promoting for peer-to-peer learning, combined learning, and lots of sessions has been done. I personally am working with them to bring the awareness, to educate the industry more what is happening on international level. Further, I have already discussed about the London Stock Exchange Group. That is one of the latest one. Recently, Pakistan Stock Exchange SSCB, they have shared one primer document in which they have done like what's their updates and what they are doing, and they have given the roadmap as well. So the journey is not new. If we see that in 2002, from 12, 13, 17, 19, 20, 21, I'm not going to read this slide for you, but if you see that in 2022, recent ESG regulatory roadmap is already there. And in 2023, they have given a draft guidelines for the disclosures for listed companies. So it's a journey. It's not an overnight thing which has happened in any country. The good thing that regulators know that we have no excuse for this, because to stay on the globe, especially from business point of view, from compliance point of view, we have to work and we have to make it possible in our industry level. So the roadmap which I just talked about, which SSCP bring in 2022, was this one. Like in 2022, they have already did the dissemination. We work a lot to do bring the awareness at industry level, at academia level, at regulator level. Now in June 2023, also there is SSCP has introduced the dashboard. We have already bring the disclosure guidelines. And now the next step will be more towards the capital market and the impact assessment. State Bank of Pakistan has done lots of work, because if the financial institution is not there, businesses will be a little bit hesitant to go for the compliances. So they have taken a step and they have bring one of the SDG and sustainability report in 2022. Green finance is already introduced there. And if you look at that ESRM, this is introduced by SBP. that is focusing more on social climate risk, environment and social due diligence, their specific sector impact. So from State Bank of Pakistan, I would say when it comes to the finance or lending or projects which need the finance from government side, lots of requirements are there for the businesses in which they are doing the due diligence, that how responsible the organization is towards environment and social. And that is something which is, trust me, near to my heart, that Pakistan is net zero Pakistan. We have a commitment to become net zero Pakistan by 2050. And for that, there was a coalition done by Pakistan Environment Trust, who are doing this. Trust is the trustees are the big giant organizations of Pakistan. 32 companies have already committed for science-based targets, and that is one of the, I would say, it's a pushing force or a driving force for the businesses in Pakistan to start doing the measurement. Because when you talk about SBTs, science-based targets, the data that will make you compliant with these targets are your scopes, scope 1, 2, as well as 3. So this is the driving force for Pakistan to start measuring, the businesses to start measuring their emissions, their environmental impact more accurately, precisely, according to the standards, according to the regulatory requirements. So there is no problem, there is no mistakes left. So SBTs cannot be complied with. So this is one of the biggest initiative, or you should say that the work is done in Pakistan, that there is one organization who is taking all the businesses in Pakistan on the road of getting science-based target aligned of their practices. So that is something, even for my own clients, we are working, and the measurement comes first. We are talking about philanthropy. We are talking about resources will not become less for the new generation or the future generation. We have to save the planet. We have to save the environment. I have a question from everybody, that until unless we will not measure what we are doing, how we can improve from there. So here comes the people who are best in measurement, best in following the standards. And here is the connection of environment and social with the chartered accountants or the financial consultants, where we can do the measurement of their impact on environment and giving them the financial number, some kind of data. And this all is actually numbers and data. And this journey will be bringing from you standing now where you are doing maybe 1/3 of the emissions of the globe, how you will reach and minimize your emissions and bringing the globe, the whole world, to the net zero by 2050. That is the target majorly by all the countries. So the good thing is Pakistan is also part of that. Regulators, I already talked about that. State Bank of Pakistan is working on that. SACP is working on that. Pakistan Stock Exchange is working. There is indexation is already there. The dashboard is also there. Definitely, if indexation and dashboard is there, your credibility is improved. Your the business capability to attract new capital or their rating or credit rating, this everything will be connected with the lens of E, S, and G. That how good you are with the environment, how properly you are managing your impact on society, and how controlled governance you have. So this whole reporting is that actually beneficial for the businesses. Besides that, how much caring you are for your planet, it is the reason of sustainability report is that if you want to sustain in the business environment, if you want to continue your businesses on the globe, if you don't want, or you want to disappear from there, then definitely sustainability report is not required. But the future of sustainability report is connecting your environment and social impact with your financial numbers. That is the ultimate, I would say, journey where we all have to go holding the hands together, and then we can improve our measurements and we can improve our performance. So because I'm representing Institute of Chartered Accountant of Pakistan, and I'm literally proud to tell that we are working so hard day and night, that how we can do the awareness, how we can educate the business, and how we can bring we can expedite this journey of sustainability reporting in Pakistan, and we can bring it at the international level. So there are few initiatives or steps which Institute of Chartered Accountant of Pakistan has taken already. We are already compliant and aligned with SSB, who has issued new standards S1 and S2, which my previous speaker has already explained. We are doing various webinars, workshops. I am one of the lead trainer of the workshops, and many documents and many guidelines are published by ICAP time to time. Even the recent document which the President of Pakistan has already published, it's published by IFAC, and it's really appreciated that ICAP is working side by side to improvise and to expedite the journey of SSB, that is for IFRS standards, that is S1, S2, that is the future, because I'm sure one will be thinking that why IFRS standards when we are adopting, we already adopted GRI, we have already TCFT. So that is the global baseline or the language in which the sustainability reports can be crafted. So anybody sitting in Europe or Singapore or Pakistan or Indonesia will understand the sustainability report in the same language as we understand our financial standards, because it is made, financial statements are made according to international financial reporting standards. Likewise, we needed one globally accepted language. So moving forward, Pakistan is doing, mashallah, alhamdulillah, lots good things, and we are on the journey where we can reach to mandatory adoption of sustainability reporting. Now, what sustainability reporting is adding the value? It's internal, external benefits. Definitely, if actually our speaker has given lots of facts and figures that how a corporation or a business who is doing the sustainability reporting is getting benefited. So if you go and research, you will see that your credit rating, your brand equity, your impression is changed, your positioning is changed in the globe if you are doing your sustainability reporting. And here I want to share one thing very clearly with all of you. Like financial statements, we always try that we can show profits. Sustainability report is not like that. That is to tell transparently your impact. Either it's negative or positive, it doesn't matter how you are impacting or how you get impacted. Either way, our speaker already mentioned one term, double materiality. So how the organization is impacting outside world and how outside world is impacting the business. So double materiality or double impact. So if we are presenting all these facts and events in form of a sustainability report, that is what investor and stakeholders is looking forward. A very summary of that. I was just having a discussion 2 days before here in Europe. Now there are 3 standards globally, which are most top standards: GRI, IFRS sustainability standards S1, S2, and European standards. So these are the 3 major standards, and interoperability is already there because everybody understands that it is difficult to bring all the languages together. So yeah, I will just do quick. So governance, if governance is not there, you can see from the slide, your economic performance, your environment performance, your social performance, if you don't have the strong corporate governance or roots, you cannot manage it. And now it is required that whatever your governance is, from roles, responsibilities, their skill set, everything bring in the sustainability report. And once you presented everything in the sustainability report, then comes assurance that how accurate your sustainability report is, how much credible it is, how we can trust. So this is a journey of the assurance sustainability standards. And you can see that the last standard 5000, it is already in the draft form. And September 2024, you will get the final version of the adoption of ISA 5000. Sustainability report, only three parties are involved: the management, practitioner, and the users. We give two kind of assurance. One is reasonable assurance, one is limited assurance. Reasonable assurance is still not practical because it's a very huge project. Limited assurance is when you select what you want to get assured. So this is something I just give you the idea that there are two kind of assurance. Definitely, if a report gets assured, it becomes more credible, your brand equity improve. Now, what the challenges are there? I'm sure these challenges are in all the developing countries: resource constraint. People are thinking, businesses are thinking that this is burden. They are not saying that it is something they have to do. They are still thinking it's a burden. So there are limited awareness, lack of incentives. Compliance is always challenging. Data, as our previous speakers are talking about, that data still is something difficult to have. And then stakeholder engagement. So my final slide, yeah, it's there. The final slide is that ICAP and regulators are already discussing about that, and the adaptability of IFRS standards is in the phased form. So hoping from 2025 onward, we will be having mandatory sustainability reporting following IFRS Standard 1 and Standard 2 and the coming standards coming up. And that's all from my side. Thank you very much. Let's save the planet and save the resources for the future generation. Thank you.
Thank you very much, ma'am. Now I request CA Ashish Gupta ji to introduce our next speaker of the webinar, CA Dr. Rashmi Enapur. Over to you, sir.
Thank you, sir. Now I'm introducing CA Dr. Rashmi Inapur, ma'am. CA Rashmi Inapuri is a partner with LNCO. She holds a PhD in sustainability reporting, a degree in LLB and MBA finance, and carries with herself more than 17 years of professional experience in the area of internal audits, statutory audits, income tax, and GST. She preliminarily specializing in sustainability reporting and is an ESG GRI 2021 standards certified professional from KPMG, BRSA certified from ICAI, certified GRC professional from OCEZ, and has completed sustainable investing certification from Harvard Business School. Projects handled by Rashmi includes area of circular economy, carbon and GHG accounting, carbon credits, and sustainability. She has also published numerous articles and presented papers on sustainability and other topics at various forums. Welcome, Rashmi ma'am.
Thank you, sir. Thank you so much. I'll just share my screen first. I think it's visible and audible.
Yes, ma'am.
Yes, ma'am.
Okay. So, and it's so difficult when you come as a last speaker after two beautiful and informative sessions. I must thank speakers from Sri Lanka and Pakistan for enlightening us in relation to what is happening in their countries. Those two were really wonderful presentations. So I'll just try to put my perspective in Indian context. So introduction to sustainability has been beautifully explained. So again, ESG stands for environmental governance and social aspects. So sustainability reporting, it involves, it's not only the reporting aspect, but there has to be policies and procedures. This is what, when I go to client place, I tell them, it is not that reporting. It is not that, like, you have done some activities in complete 1 year. So we are reporting on those. That is not a formality. So once we are reporting on sustainability, a proper policy and procedure has to be kept in place and going on every year. That has to show the impact, and there has to be a positive impact. So this is where we are still in creating awareness to the organizations as well. And many companies, they have already started publishing their reports, and where they have set their own net zero targets. As we all know, in COP26, India has agreed to achieve net zero by 2070, but many companies are already heading with the shorter targets. So there are around more than 600 frameworks in the world. That is where the companies, when they're supposed to report on sustainability, are more worried nowadays which framework to follow, because each framework, it absorbs a lot of resources and the money. So which framework should I follow so that that will have a proper reach? So in this, I can tell that global standards which are widely acceptable, and GRI, we call it as mother standard. It has started evolving over 3 decades. It started from 1997, and there are 3 sets of standards in that. One is the universal disclosures, and then sector specific standards and topic specific standards. And it's already been shown in the graph as well by the previous speakers. SASB, TCFD, CDP, everything is being merged into IFRS, and that's a real great move. And as of now, global frameworks, we can say it as GRI and IFRS S1, S2, and GRI is complementary to IFRS because IFRS has not completely evolved, and ESRS. So when it comes to India, by NGRBC principles, SEBI has released the format of BRSR. It started from making it mandatory to 100 listed companies based on their market capitalization. Then it increased to 500. There was 5-fold increase. Then it increased to 1,000 companies. So India being such a huge country, so what SEBI is telling is, it is mandatory for 1,000 listed companies, but when it comes to BRSR Lite, it is urging MSMEs, please try to release your voluntary report, that is BRSR Lite. Why is this made mandatory? Is because of the supply chain constraints. Nowadays, we are seeing many companies, like in India, if I say, mostly 80% of the companies are into MSMEs. So they form major crux of the supply chain. So if they are not sustainable, the larger companies, they don't want to take the headache of the carbon footprint of the smaller companies. So if we take example of JSW, which is located near Thorangal in Ballari district, so they have clearly mandated their supply chain that if they are not sustainability practices compliant, we are not going to purchase any raw material from you. So this is the reason why MSMEs, they have to start looking into sustainable practices. So what are the essential skills for effective reporting? We understood that there are 3 reports, that is GRI, and in Indian perspective, it is BRSR, then European ESRS, then IFRS. But what skills we are supposed to possess for the effective reporting? So there comes the topic of data collection and management. So what are the methods of data collection? So it can be surveys, audits, and monitoring tools, which is specific to Indian industries. So already in India, there are many softwares, the SAP platform, which have been developed to capture the data from the ERP of the larger organizations. One such company, which I can name is because I've worked with them, that is Wipro. They beautifully capture whatever detail is required for BRSR and GRI. The only problem what they face is, what I have seen is the scope 3. When it comes to capturing scope 3, where there are around 15 parameters which are supposed to be captured, both upstream and downstream, so that they are facing challenge. Apart from that, everything is properly aligned in Wipro. So that's a great thing. Then analysis of data. Once the data is collected, so collected in a proper way, so it is the duty of the management to analyze it. So why analysis? What is the use of analysis? So analysis of data will help us to make our future projects. So how to go about, how to reduce the energy consumption, what all we can do in the waste management area. So we can identify the trends. If we see BRSM, even in BRSR, for few areas, they're asking for the comparative figures. The idea behind asking for the comparative figures is, even the SEBI, it wants to understand trend. Always it has to be in the downward trend when it comes to using of fossil fuels. So that is the main idea behind calling for the comparative figures. Then critical evaluation and assessing the data, including sustainability of supply chains. So this is what I told. Supply chains is very important. Now we are working on a project who is a supply chain partner. Their collection of data is become very difficult because they are into MSMEs, and MSMEs, they are not exposed to all these CSR. They're exposed to CSR activities, but not in a proper way where ESG is asking for. They don't know what ESG committee is. We are really having problem collecting the data in that particular client. They are having around 10 to 12 units, but we are getting details in regard to 4 to 5 units. So we are not able to capture the data because it is not properly maintained. It doesn't mean that there is no fuel consumption. It doesn't mean that there is no electricity consumption in the rest of the units, but they're not keeping it, they're not maintaining it. So that is the real challenge in India when it comes to supply chain. So example I can give here is like how the analysis of data helps is ITC Limited. It analyzes water usage data to improve water efficiency in its operations and the supply chain. Then stakeholder engagement. So when we take GRI, for example, GRI, because in BRSR, we are still not developing any materiality assessment or materiality metrics. But when it comes to GRI, because many Indian companies are also following GRI because they have multinational presence. So when it comes to doing the materiality assessment, whether it is single materiality or double materiality assessment, stakeholder engagement is crucial. It is very important. Even my PhD topic, it revolved around sustainability practices and its impact on stakeholders. So when I started in 2012, nobody was aware what sustainability meant. People were releasing reports. The top companies were releasing reports because they had multinational presence and they had that mandate from other countries. But within the company, the internal or external shareholders were not at all stakeholders. They were not at all aware of what sustainability meant. But now it is not the case. It has evolved over years in India. So stakeholder engagement is crucial. So why it is important? Because that improves the trust and the transparency, and it provides the perspective and insights from the stakeholder perspective. Always the management cannot take decisions on behalf of the stakeholders. And even in the materiality assessment, I'll just walk you through how we do materiality assessment. And key stakeholders here are, as we all know, internal will be employees management and BOD, and external will be customers, suppliers, investor, and community regulators. So methods and tools for effective stakeholder engagement. So surveys and questionnaires has to be done. So even when we are doing materiality assessment, so we develop the questionnaire across E, S, and G factors, and we see to that to whom the questionnaire is circulated. There are different type of stakeholders. So all the stakeholders will be exposed towards E, S, and G factors. But for example, if we are circulating the questionnaire to employees, so mostly they will be answering the yes perspective, because they fall into the social. So in this way, we design the questionnaire which suits the particular stakeholder group. And also we help organizations conduct interviews and focus groups, and we do also arrange workshops and stakeholder advisory panels. And this is how this will be the best practice when it comes to stakeholder engagement, because the feedback is taken care and the communication is transparent, and we have to update the stakeholders. It is not that we are taking input from them, but we are supposed to educate them what we are doing next. So as I said, materiality assessment is the beginning part when we are opting for the international standards. So how we do the materiality standard? First is the identification and mapping of stakeholders, understand their interests, influence, and expectations. And we are supposed to understand what are the relevant ESG issues. As I said, the organization, when it is operating, there may be some 50 issues, but we need not report all the 50 issues. We have to prioritize and we have to rank them. So in that way, we are supposed to understand the relevance, and we are supposed to engage the stakeholders, as I said, through surveys and interviews, and we need to analyze and prioritize. And then we are supposed to develop a materiality matrix by ranking. So obviously, the way the world is going on, the climate change, what we are facing in South Asian countries, the climate issue comes and it carries the first rank in all the materiality matrix what we are doing. So how to integrate materiality findings in the business strategy? As I said, whatever practice we are doing when it comes to reporting, whatever we are doing in the area of sustainability, it has to align with the policy and procedures, and on day to day, those things has to take place in the organization. Only then we can tell that whatever sustainability step we are taking in the organization is having a positive impact. So there has to be proper strategic alignment. Then implementation, as I said, there has to be proper action plans and it has to be part of the policy. Then performance measurement, the KPIs, what we fix, the risk and opportunities, and whatever materiality assessment we do and the KPIs are fixed, the progress has to be tracked. So only then, and if we find that there is some risk associated with it, we are supposed to frame the policies to mitigate it and then again re-monitor it and again bring it back on the track. And we also should see that the reporting is maintained consistently, because when it comes to GRI, they tell that the period, it has to be like, maybe your financial year is from April to March, but if you're following GRI from Jan to December, you have to follow it in a consistent manner. So reporting on materiality and ensuring continuous improvement. So as I said that there has to be proper monitoring which has to take place, and it has to go to the lower level of the working, lower level of management, in the middle level of management, all the hierarchies of the organization. Only then the practice what we are planning to bring into the organization will have a positive impact. So once we are ready with the reports, there has to be some assurance. So as of now, it was only limited assurance in India. So why it was only limited assurance? Because ESG topic per se, it was very new. It's in the nascent stage. Though many companies started releasing it right from 2005 in India, the sustainability reports, but to adopt it and to make it mandatory took many years. So when it came to BRSR, there was limited assurance, or the sustainability report, it was limited assurance until 22-23. But in 23-24, SEBI has released the new format of BRSR with the core points, 9 core points. So we have 3 sections, section A, section B, and section C in BRSR, 9 principles. Then there are core factors. So on those core factors, for example, the core factors will be GHG emissions, waste, water, and openness to industry. And all these things will carry a reasonable assurance, and which indirectly what SEBI is telling is The other factors in the BRSR will have limited assurance, and only these core factors will be having the reasonable assurance. So why assurance is important? For building the trust and improving the credibility, and it also helps in rating. After assurance, when the company goes for rating, it helps in the rating. So what does limited assurance mean? So limited assurance is, it will just check on the whether the procedures are followed or not. For example, if we take BRSR, whether all the sections are filled, because when it comes to section A, we are not supposed to leave anything blank. And when it comes to section B, if it is not applicable to us, we are supposed to say not applicable, or we are going to do it in next year. And there are also essential indicators and leadership indicators. So leadership indicators are not mandatory, but essential indicators are mandatory. So when it comes to limited assurance, we are supposed to see whether the report is drafted properly. So example, an audit firm conducts a limited assurance engagement on a company's carbon footprint disclosures, reviewing the data collection process and the calculations. So we have conversion factors from DEFRA. So we are applying that only, like, whether those things are followed, whether the updated conversion factors are followed. So when it comes to reasonable assurance, as I said, the core factors has to be reviewed in a more diligent manner. So the scope, it includes extensive testing of data and controls. So example, what we can give here is an assurance provider performs a reasonable assurance engagement on a company's entire sustainability report, including environmental, social, and governance metrics when it comes to sustainability report. But when it comes to BRSR, which is a part of sustainability report, it will be the core factors. So there is one more part called as the third party verification when it comes to GH. So where the company can do this exercise by itself, or it can give to the other company for calculation. I'm telling only calculation. But once that calculation is done, there may pitch in some other third-party verifier who can verify the same details, whether it is proper or no. So third-party verification always will give weightage to our report. So then comes certification. For example, ISO 14001 certification for the environmental management system. So the regulatory bodies who are able to give, who are authorized to give, will give the certifications to the companies. Again, it improves the credibility. And when it comes to self-declaration, so any company, like if they're following GRI or if they're following BRSR, there is nowhere mentioned that only some professionals or any auditors or certified professionals should prepare the report. When it comes to assurance, only then it is been mentioned who has to give the assurance. But when it comes to preparation, the management can assign somebody to make the report. There comes the self-declaration. If we are taking, for example, BRSR, we can give the declaration that all the data was collected by the certified people of management, and management takes full responsibility, like stating whatever is there in the report is true and fair. So best practices for accuracy in sustainability assurance. So data collection and management has to be verified before giving the assurance. And the stakeholder involvement has to be checked, because some companies, what they do is they prepare the questionnaire and they like fill it and they say that, okay, we have collected the data, but that should not happen. There has to be random checks or the sample checks where we are supposed to go and check with the stakeholders whether they were part of the reporting process. Then independent assurance providers, as I said, when we are giving assurance, if we like get the third-party assurance or the third-party verification report, that will add to our assurance, that will make our work little easier. And we have to ensure also that it is meeting the international standards as well. And the regular audits, conduct regular internal and external audits so to see that the practices have been followed properly, and there has to be clear methodologies set, like how the framework is being used, like what are the assumptions taken. And as I said, there has to be continuous monitoring, and mitigation and improvement. So to do all these things, the reporting or the assurance to be perfect. So whatever practices the company is planning, it has to get imbibed into the governance. So let us see how to imbibe the sustainability practices into the governance model. So, and why is it important? So because of the long time value creation, and as we also we are seeing now that everyone is moving into EV vehicles and they're shifting from fossil fuels. Again, there is a lot of talks that EVs will produce more pollution or emission. But when we see that EVs are improving the air quality, irrespective, like mining and manufacturing of EV vehicles will consume more energy and emit carbon dioxide, but when it comes to tailpipe emission and about the air quality, then it is minimum compared to the other vehicles. And but the thing what we have to keep in mind is at least 8 years we are supposed to use our EV vehicle to really get the benefit of that. So then imbibing the sustainable practice into our governance is important for risk management, as first speaker excellently touched upon all these points, and for the stakeholder trust. And the objective is, it is very clear, whatever sustainable practice is happening in the company, it has to align with the 17 SDGs, 17 Sustainable Development Goals. Only then that activity can be considered as the sustainable activity. So then foster transparency and accountability through ESG reporting. And though it is not mandatory to our company, it's always better to report on this metrics. It will increase the credibility and make us stand apart, and it will give us the competitive advantage. So board composition and structure. Many companies we are seeing nowadays, there is a separate CSR committee which is formed, the ESG committees are formed, and the policies and procedures, they are coming into picture and they are being monitored regularly. There is something called as performance metrics and incentives, which is linked to the ESG goals. So the executives are compensated based on the achievement of the sustainability targets and the risk management. Then what are the benefits is the enhanced reputation and the operational efficiency, because sometimes what happens is when we are trying to bring in some new change in the company, it will lead to the cost saving, because we will come to know that there is some item which was lying without recycling and which can be reused in the business. So this has happened in few companies. And investor attraction. There are so many impact funding agencies in India, what we can see is, and they are completely into ESG investments. They are inclined towards the companies who are into ESG practices, and they want to fund only those kind of companies. We are also doing a couple of projects where we are giving due diligence report to the impact investors to invest in these kind of companies. Then the challenges. What are the challenges for adopting the sustainability practices is the cost involved. Cost will be there, but it will be for short term. In long term, there will be a lot of benefits, because as we all know that CBAM has been introduced and it is attracting like around 28% of carbon tax. So maybe now it is postponed for 1 more year, but that is sure to come. And then change management. There is always cultural resistance when it comes to change, but change is inevitable and it has to be taken care of. And measurement and reporting, as I said, each country is having a different kind of framework, and to ease this thing, IFRS is coming into picture and GRI is widely accepted. So we can see to it and adopt the framework which is widely accepted. And regulatory compliance. This is what happens. You are in India, you will be complying with BRSR. So you have multinational presence, then you have to go for GRI. And if you are exporting to Europe, and we have seen many companies like, they're getting a kind of questionnaires where they're supposed to fill, whether it is Singapore or Europe. So all these things is becoming a problem, but I think it will ease it once we imbibe sustainable practices into our company policies, everything will be eased. So these are few of the case studies. One is about the Tata Motors, as I told about the EV vehicles. So when they thought of doing something where the fossil fuels use should be reduced, then the ITC is a classic example when it comes to India. That ITC Chopal was started way back before ESG was even introduced. Then Infosys, it is the first campus where like they want to achieve carbon neutrality. So this is my last slide. I think I'm also running out of time. So yeah, this is the summary. So this is what I can tell. It is always better to integrate and imbibe the sustainable practices into the company or the organization framework. And there has to be continuous assessment, strategy development, implementation, and as I said, monitoring and reporting. And call to action is still, I feel that stakeholders are not a greater part of all these practices, and they have to become the part of it. And let us leave the green footprint and not the carbon footprint to our future generation. With this, I end my deliberation. Thank you so much.
Thank you very much, Rashmi ma'am. Now I request CA Arun Bhaskar ji to present vote of thanks. Over
Thank
to
you so
sir.
much, sir. Thank you so much, sir. Am I audible?
Yes, yes.
Okay. सस्टेनेबिलिटी रिपोर्टिंग स्टैंडर्ड बोर्ड के द्वारा आयोजित इस सेमिनार में थैंक यू सो मच टू सुपीरिया श्री प्रिया मैम, चेयरपर्सन SRSB, श्री अनुज गोयल सर, वाइस चेयरमैन SRSB, and all the speakers. Thank you so much.
Thank you so much.